But absolutely, I think it's naive to say no FDA, right? It's sort of like, Ron Paul saying end the Fed. I'm actually sympathetic to that in some ways because, like the Fed prints all this money and so on and so forth. But I'm a pragmatist as opposed to a doctrinaire libertarian. And, the problem with, let's say, ending the Fed or ending the FDA is they're at the center, they're the hub at the center of like millions of spokes. The entire system is built around them, you know, like I- to an like incomprehensible extent. Every
Mm.
wire transfer, it's ultimately linked to like FedWire or something regulated by it. And every single biotech company, drug company, device company has something pending with the FDA. Might use an FDA database. It's not like they do zero things of value. They do a fair amount. And so just simply having that be a black hole is so impractical as to be laughable. And so you can't really say end the Fed or end the FDA. That's like, what people will hear sometimes, but that I don't think is practical. What you can do, however, and this is very important, is you can exit the Fed, exit the FDA. And what that means is figuring out a way, which is non trivial, to build a different system in parallel and have that be buggy and incomplete and risky to use at the beginning, such that only early adopters are in. But over time, it proves itself out and handles more and more and more of the criticisms. And the V2 and the V3 and the V4 and the V10 and so on ship over years and decades. And then eventually it can stand up and take over from the previous entity. Okay. So we're actually doing that. That's what Bitcoin was, right? Bitcoin inverted the premises of the financial system. Satoshi, he said, hey, actually, yes, deflation is good. Gold is good. User level custody of your own keys is good as opposed to having a bank custody it for you, and so on and so forth. And he flipped the premises. And
Mm.
by flipping the premises, he put the ball at the 100-yard line, and a completely different system with different axioms was built up from that. And that system has proven to be superior to one that was just edits around the current system. Every bond, every loan, every mortgage, but also other things like passports, marriage certificates, birth certificates, death certificates, every valuable scarce asset, both fungible like a dollar and non-fungible like a birth certificate, will go on chain. And the reason is it's sort of like a fundamental set of primitives for programming with scarcity. So like the thing is $1 trillion today, but it'll be like 10 or $100 trillion by 2030. That's like unless the internet goes out and the world is hit by a meteor, that seems very clear to me.
Mm. Well, let's
The same.
differentiate
Go ahead.
blockchain from cryptocurrency. I mean, it's implicit in much of what you just said, but I mean, people will be most familiar with Bitcoin, which is
Yes.
one among many cryptocurrencies, and
Well,
that was Satoshi's breakthrough. What?
yes. So
Just parse these concepts.
sure. So Bitcoin is the most important cryptocurrency. It's the first. It's also, I would argue, something that is categorically different than the others because it's very hard to replicate what Bitcoin did because first it was like, the first successful one, the creator has vanished. It's meant to be a digital gold. The protocol seems to be, mostly unchangeable, and monetary policy seems immutable. And so it's kind of solving its own problem of being digital gold. And I think it has what we call product market fit for that. And it's on a path to, becoming essentially the center of the world economy. And if
Mm.
you think about how important gold was in the medieval era, everything was built around it. Empires, wanted gold. Gold, was a big thing for the Spanish. Gold was a big thing for everybody because it was a scarce resource that powered all these kingdoms.
So
And if we,
maybe
go
let's
ahead.
just linger on Bitcoin for a second. You don't think Bitcoin is likely to be superseded by any other cryptocurrency?
In the role of digital gold, no.
Mm.
In other roles, like as a private currency, for example, that can be encrypted, something like Zcash or Tornado Cash, or maybe Monero, or some of the newer stuff like Beanstalk, which I'm a small investor in. I assume I'm an investor, by the way, in every cryptocurrency. Just FYI, I
Mm.
hold Bitcoin, I hold Ethereum, so I have enough interests that I just want to disclose that. I assume I'm an
Right.
investor in everything
Yeah.
because I don't have to give 500 disclosures. So, but I think that I maintain a mostly I think it's impartial, but at least let's say broad-minded stance on it. I'm not any coin maximalist. Bitcoin, because of its acceptance by institutions, because of its name recognition, if you talk to somebody who's outside the crypto space, they'll ask you something like, "What Bitcoin should I buy?"
Hmm.
You know, So Bitcoin is just like, people may not have heard of something, but they've heard of Bitcoin. And because of that, it's like this sort of traveling wave bubble of information where its brand recognition is so high that so long as there isn't a catastrophic failure, it's going to, I think, win the digital gold role. And certain aspects of it that were, you've heard that saying, it's not a bug, it's a feature,
Hmm.
right? Certain aspects of it, like, the fact that it's globally transparent, that the blockchain is there, and so on. These are things which I think, will actually make institutions more comfortable in the long run, where, at some point by 2030, the Bundesbank of Germany may have not just gold reserves, but Bitcoin reserves,
Right.
2035,
Right.
and
So
because it's
so
on
you're
chain, they
bullish.
can
It
track
sounds
it.
like you're bullish from I know you're not eager to give investment advice, but it sounds like you're bullish on Bitcoin at any current price for the foreseeable future.
Yeah, I mean, I think basically the thesis on it is, you know, gold is at a few trillion dollars market cap, but today's gold is a neutered version of what gold used to be. Gold used to be the main event, right?
Hmm.
Gold used to be the center of the world economy. So gold in 2021 is not gold in like the pre-modern economy, which was a much, much, much bigger deal. So if we can recenter the global economy around gold, digital gold, meaning not physical gold, but digital gold, it's way more valuable than just a trillion dollars. It's like the main event. Then the question becomes, at that level of value, every cyber attack and so on will be waged against it. And so that is a test that we have to see whether it'll be able to survive. But it
Well,
survived.
is it?
Go ahead.
I mean, I'm sure people have analyzed its robustness against attack and the ways in which
Yes,
someone could
but computer security is hard.
yeah,
Computer security is
no
very
doubt.
hard. And you only need to screw up once. And there's libraries that have vulnerabilities that are discovered later. And there's very
But
smart security
even now,
people.
there
And
are hundreds of billions of dollars to be made by successfully attacking it, right?
yes, that's right.
Yeah.
And I think the Economist talks about like the famous economics joke, like, oh, there's $100 bill on the sidewalk. Well, it must not be there because no one's picked it up, right?
Hmm.
You've heard that one, right?
Yeah.
I'm assuming. So in the same way, it is true that the market cap of a protocol is roughly correlated to its ability to resist compromise, which itself, by the way, is a deep point. Right now, the way that the US government, for example, how does it rate that a system is secure? It has some bureaucratic process, some ISO 9000-ish kind of thing. So I forget what it is. There's actually an ISO process, like ISO 8000 something, I forget what it is. There's some bureaucratic process where people go with a checkbox to rate where something is secure. And this is not what actually matters, which is, can you code attacks, right? Can you get a blinking cursor on that other guy's machine? Can you view their private keys? Can you exfiltrate their data? Can you gain egress or can you not, right? And the most direct test of the security of a system may turn out to be the market cap of its chain. And now I'm getting into a little bit of computer security stuff here for a second, but essentially, you know, like future governments will only be able to survive if they have sufficiently good information security. And we're just at the beginning of, have you seen like some of the US government hacks that have been happening recently?
Yeah. Yeah. Solar winds
Yeah.
and yeah.
SolarWinds, there was the OPM hack from a few years ago, the Texas, like they are basically defenseless, right? And so we've got this weird combination of, the surveillance state and the Keystone Cops, where they're hoovering up all the information, then leaving the back door unlocked. Yeah. And so sometime this decade, all of your stuff, all of our stuff will probably just be like sprayed on the internet. And it'll be much more tangible as to what it really means to kind of hack all these systems, because these agencies, their concept of cybersecurity is passing regulations and doing things with paper. The alternative paradigm is something where, for all its many flaws, a blockchain is under constant economic attack. And if somebody compromises it, you immediately see that the damage has occurred. It's not like a silent compromise. The damage has occurred because the money has been moved. There's an incentive to all except, a nation state attacker to immediately make public that they compromise it because they move the money. You
How
know, uh,
was there evidence of compromise? I didn't actually follow this story very closely, but in the recent ransomware attack, where there was some number of millions of dollars in Bitcoin paid to the attackers, wasn't the FBI or someone able to get back some of the Bitcoin in a way that suggested that there was a security problem with Bitcoin itself?
so it's so funny you say that, because that was misreported by the New York Times because basically, these Salzburger employees don't actually know math or computer science. They had reported it as if like ECDSA had been compromised, right? They've reported as if these, without getting into details, like these fundamental math problems had been solved.
Right.
Actually, it was like a search warrant for an exchange. So what happened was the legacy system was broken, and the system that had the ransomware attack on it, but Bitcoin certainly was not. And it wasn't like the FBI had some master key to be able to like reverse Bitcoin transactions. Not at all. It just basically, I think, served a search warrant to an exchange. This was misreported at the time. Preston J. Byrne actually had a thread on this where he kind of gives more detail on it. Yeah, Preston J. Byrne on Twitter. If you just Google Twitter, Preston J. Byrne, ECDSA, I think you might find it.
I think you said at the top, given your backstory, but you were the CTO of Coinbase, right?
Yes.
And so
it's in my ambit, it's in my wheelhouse.
Yeah, no doubt. Coinbase would be the exchange where many people would have bought Bitcoin if they bought Bitcoin at all.
I don't know which exchange it was, if that's what you're asking.
Right.
But basically,
no, I'm more asking, is there a vulnerability with these exchanges? I guess we're kind of going down a rabbit hole with respect to Bitcoin here, but
no, it's not a vulnerability versus an exchange. It's basically so here's the thread from Preston J. Byrne on June 8th. Well, that was my time zone, maybe June 8th, June 7th, 2021. And he cites Jordan Schachtel, who says, more info from the warrant here. So it looks like I was right. The FBI did not obtain the private keys and said they took legal action against an exchange or some kind of custodial wallet that has servers in Northern California. These, quote, hackers were grossly incompetent. So, I mean, there's no vulnerability on the exchange unless you count being, at least in this case.
But these ransomware attackers then did not take private possession of their keys. They kept their money on the exchange, and that's how it was reclaimed by the FBI.
I think, or at least they routed some funds through an exchange, and that's how they got caught. They thought they could just sell it that way. They weren't like familiar with chain analytics.
Right.
So, but yeah, it wasn't a vulnerability in Bitcoin. It wasn't a vulnerability in an exchange in this case, because it was just a search warrant that was given to them. And this actually illustrates an important point, which is that blockchains, for their many faults, are hardened systems, right? Think about the difference between a combat veteran and somebody who's just, read about it in books, right? The former is this grizzled veteran, and the latter is just some theoretical kind of, person, right? Who's really bad at computer security are government IT developers. Who's getting really good at computer security are successful blockchain developers. Because every single day they are handling attacks on their systems by people who are looking at every edge case and trying to compromise it and trying to debit and credit. And so, if you were to draft the future Space Force, they'd be out of SpaceX. And if you draft the future cybersecurity force, that would be out of the crypto space. It would not be your government IT developers.
Yes, I forgot whether you fully differentiated blockchain from cryptocurrency. Maybe it's worth maybe just say something about Ethereum, and that would allow you to make this case.
Yes. So the fundamental data structure underpinning Bitcoin is this concept of a blockchain, which is basically every 10 minutes, a new block of transactions is appended to a chain of all the pre-existing ones. So you can look at it as literally a chain of blocks, right? A block and then a link and then a next block and then a link and so on. And you go to a website like blockchain.info or btc.com and you can actually see the blocks stream in. They're blocks in the sense of like a table of transactions, like a square table of transactions is a block. Then you have a gap of a few minutes and there's the next block of all the transactions.
And how fully distributed is this? Whose computers house the blockchain?
Right. Great question. So Bitcoin so I actually wrote an article several years ago called Quantifying Decentralization, because the concept of whether something is decentralized or not, I argue, is not simply a binary thing. It can be quantified. The metric I proposed is the number of independent actors you need to compromise the system as a whole. Okay. Bitcoin is probably by most measures the most decentralized blockchain in terms of, how many different people hold it, how many different, computers are mining it, and so on and so forth. We saw an empirical test of that recently where China swung very hard against Bitcoin miners, right? So in 2017, they swung hard against Bitcoin exchanges and drove them mostly out of China. And in 2021, they started cutting not just into muscle, but into bone and they went hard, like basically just kind of shut down exchanges, but they pushed miners out of the country. They just told them, and these miners had, by the way, they had, dotted every I, crossed every T. They'd done all their stuff. They thought they were secure, and they just got wrecked by the Chinese government over the course of a few weeks as part of this, like broad China crackdown.
And it was some crazy percentage of Bitcoin miners that were in China, right? And there was a
It
majority.
was a high percentage, but now that argument has been taken off the table because all that happened was that, Bitcoin blocks slowed down for a little bit, but for the most part is basically unaffected, right?
Mm.
And so like what you had was essentially the most technologically competent, gigantic centralized nation state basically attacking mining, and Bitcoin network managed to just chug on, right? Nobody really, I shouldn't say nobody noticed anything. It was like a slowdown of blocks, but it really wasn't that big a deal.
And what actually physically happened in response to that? That you had Chinese miners who ceased mining, and then more miners sprung up in Finland or wherever, or
well,
there
the
were
miners
just
had
fewer
already
miners.
sprung up in Finland, right? They'd already sprung up in other countries, and because
but if something, I mean, whatever it was, let's say there was 60% of miners were in China, and China turned the screws down on them. Did we lose 60% of the Bitcoin miners overnight, and it didn't matter?
Something like that. Yeah. Basically, I'd say, looking at bitinfocharts.com, I tweeted about this. At the very peak, let's say, that the hash rate was like on the order of 180 exahashes, per second. And then like in the very trough in like early July, it was at like 80. So you went from 180 to 80, and now it's back up to like 140. Right? So it's visible in the chart. Okay. So, what does that math work out to? 80 over 180. It's like, so about 55% of Bitcoin mining roughly went offline looking at this chart. But, a few months later, it's back at 140, which, I mean, that is the government of China swinging hard at Bitcoin. Right now, it's back up to like 78% of what it was. That's the government of China swinging hard at Bitcoin. And you just don't have something else in the world that is that organized and ruthless and technologically sophisticated. I mean, one way of thinking about it is, how many Western politicians do you think can even describe what a firewall is?
Well, but to that point, wasn't there just some legislation in Congress that is, it may still be in process, that was going against?
Oh, the crypto infrastructure bill.
This is more of a regulatory attack on
exactly.
Bitcoin.
So if the Chinese attack, I mean, the Chinese government, they're staffed in large part by engineers. The Great Firewall is a tool of policy. They were very early on it. There was actually this wistful article in the New York Times a while back that was kind of wanting a Chinese-style Great Firewall to stop all this misinformation, meaning like, anybody who's not a Salzburger employee publishing something online would be, misinformation till deemed otherwise. But yeah, to your point, like the Western attack will not be technical in quite the same way. I mean, the Chinese attack was technical / regulatory. The Western attack is regulatory primarily. And what they were trying to do was basically criminalize like blockchain software development, to say, hey, if you put out software that, allows people to use it for this or that purpose that we don't like, then you might be, you might have to do 1099s to everybody who's using the software, and basically impose an impossible reporting burden.
Right.
A rough analogy is, imagine if Cisco had to know the home address of everybody who was sending packets through a router. Okay. If YouTube needed to know your mailing address for every single thing you're doing, if every website needed to know the mailing address, and not just every website, but every developer, it's an informational burden that it was portrayed in such a way as to be, oh, hey, why don't you guys just want to, pay what the government is due? And that's actually never the matter. Like the exchanges were fine with this. It's the imposition that this would have had on the software developers. And what was interesting was, see, normally unclear language in a bill, you have the Lenin-style useful idiots who will basically be like, oh, it doesn't matter that it's not unclear. The government will still take they're rational, and so these useful idiots will basically, think against all evidence and reason that the state is going to be like reasonable in its interpretation of this stuff, given every other counterexample we've seen of the U.S. state. And what was interesting in this one was very atypical, is that you got a line item clarification. Remember the concept of like the line item veto, right? This was like a line item clarification of this multi-thousand page bill that was co-sponsored by 3 senators across parties. So a bipartisan amendment specifically for this to clarify the matter that developers and miners and so on were not included. And that actually caused the state to decloak because the people who had tried to slip in this stealth amendment then decloaked. And they showed that their true intention was to go after miners and DeFi and so on, because the counter amendment they proposed very noticeably did not exempt, developers, right? And it just exempted proof of work, but not proof of stake, meaning that, they were like, okay, we'll let Bitcoin through, but we won't let, DeFi through. But it wouldn't even have let Bitcoin through because Lightning developers would have been, considered as part of this. Miners might have been considered as part of this. It was a very poorly written legislation. But the main thing is it forced them to drop out of stealth mode, right? The V1 was they tried to put in a stealth amendment. They thought that various useful idiots would say, oh, the government is well-meaning. That was decloaked by a very targeted line item counter amendment, which is extremely difficult to get in, by the way. A bipartisan amendment on a specific issue on a must-pass bill, that's really hard to do, to get a line item edit in, right? And that forced them to kind of show their hand that, and then it came out that Treasury and Gensler and the White House themselves were pushing for this, right? Fortunately, there was enough public outcry that it was pushed. I shouldn't say pushed back. It was pushed to like a kind of a stalemate kind of thing. The good thing is that there's basically nobody on social media who is like pro-state on this.
Well, do you think there's enough wealth captured by Bitcoin and Ethereum and the other players at the moment that it would really be impossible for the U.S. government to regulate it out of existence
it's not just that. I mean, the thing is they can choke all kinds of things. There's lots of wealth that was created by railroads. There's lots of wealth that was created by lots of things that the U.S. government did basically choke into submission over the course of the 20th century. All the robber barons were gelded. FDR, famously went after all of his competitors like Andrew Mellon and so on. You can Google that. So, for example, who's the number 2 guy in Soviet Russia after Stalin? Trotsky got an ice pick in his head, and then Kirov, and he got killed, right? Under mysterious circumstances. And so essentially the state has no problem, chopping off the heads. This is the same thing that's happened in China, starting with Bo Xili in like the early 2010s. And now more recently, why is the state going after, the Chinese state in this case, going after Alibaba and Meituan and, ByteDance? Like Ziming Yang didn't even do anything. He didn't give like some speech versus regulators like Jack Ma. There's nothing, like concrete. Maybe I'm missing something. Maybe someone in the Chinese internet will correct me. But it's just that the state is like, there shall be no gods before me, right? These tech guys are getting, too big for the britches. Let's chop off their heads. So
yeah, but
I don't
the CCP doesn't have to be elected. I mean, in America, we have, granted, I'm not saying that the U.S. government can't ever go against the billionaire class or the top 10,000 wealthiest people in the country, but there's, generally speaking, not an appetite to do that.
It's more complicated in the U.S. today for several reasons. One is there are billionaires on both sides, right? Like this is one where it's really the banks versus crypto, right? It is the legacy establishment versus technological progressives. And so it's something where it's actually, in many ways, I think the new political axis in the U.S. is not North versus South. I think the South will not rise again. Prior to 2020, I would have said it was East Coast versus West Coast, but really what it is it's, centralized versus decentralized. And both sides can make both, right and left arguments. The centralized can say, oh my God, terrorism, national security, we need, to control this crypto thing. And then the left-wing argument is, oh, they need to comply with all applicable regulations. Oh my God, these billionaires think they're above the law, blah, blah. And then you can also have the decentralized versions of right and left. Obviously, there's decentralized libertarian, free markets, and then kind of both libertarian left and right are in theory pro-free speech. And then libertarian left says, hey, why is OnlyFans being shut down? Why are we subsidizing these banks with these regulations that are propping them up and so on and so forth? So it is the realignment that is happening now is not traditional left versus right. It is centralized versus decentralized. And I think knock on wood, I do think that the decentralized movement ultimately wins the day, but it's going to be difficult and close. I definitely would not look at it as simply, the government can't regulate rich people, because rich people are on both sides of this one.
Right.
I
Right.
just think that the energy of history is on the decentralized side, and I think we will probably win, but it's not going to be easy.
Right. Okay. So we have cryptocurrencies of various flavors, Bitcoin being the biggest, and this solves the problem of digital
Digital
scarcity with
gold.
respect to the store of value and the medium of exchange. And although in the case of Bitcoin, it's hard to spend because it's so volatile, it's not really functioning as a medium of exchange at the moment. Well, how do you think about what blockchain beyond cryptocurrency enables? I mean,
Okay.
you
So
ran through a litany of possible use cases, but how is this a game changer for the internet and for society at large?
okay, great question. And then also I want to come up to some of the media stuff and so on,
Sure.
and maybe tie off some of the open threads that we had. I said I'd come back to it, kind
Yeah,
of
yeah.
descended down the stack. But so Bitcoin's innovation was digital gold, basically how to represent scarcity, on chain. And for 5 years, it had to prove that out from 2009 to roughly 2014. And it worked, and it was amazing that it worked because it was very counterintuitive that it would work and that people would value it and so on, but it did. And then what people realized was, Bitcoin initially had some features for programmability that were shut off by the developers because they thought that they were potentially security holes. And so essentially there were a couple of major innovations on Bitcoin. I'd say there's at least two directions that people took on it. First was programmability, that's Ethereum. And Ethereum is a very successful blockchain launched in, I think, 2015, where you can write more sophisticated programs. So it's not just a debit or credit of digital gold from my account to your account, but it's like a smart contract, which is calculating, okay, here's a loan or a subscription. I don't just debit and credit in one transaction at a go. There's some logic. If A pays me, then I pay you, and then you pay Sally, and so on and so forth in a loop, right? So those smart contracts cyber attack could facilitate, for example, crowdfunding. So there's this whole ICO boom. But they can
Mm.
do other things. They can do like, exchanges like Coinbase. You can put them on chain, which people have done with things like Uniswap. People have built, as you know, NFTs, like you putting art on chain. They have built, basically online or on-chain loans, on-chain derivatives, basically on-chain versions of almost every financial instrument. There's a website called DeFiPulse.com where if you go there and you click the graph and you go to all, you can see the absolutely vertical growth of this whole space of sort of writing financial programs. And the fundamental new thing that Ethereum and like these other blockchains have allowed is Bitcoin also allows this, but a program can now hold money. Okay, it's kind of like a self-driving car where there's no hands off. One way of thinking about it is every phone number needs to be, I shouldn't say it needs to be, but historically phone numbers were associated with humans, and then, you disaggregate that from humans, and now a machine can dial up a phone number, make a call on your behalf, or do so via an IP address, right? And so that's like a machine version of it. Similarly, you go from like a physical mailing address to an email address, and a machine can now have an email address where a machine wouldn't necessarily be able to receive physical mail. And a machine might not be able to have a bank account directly. It has to be in your name or somebody else's name. But a machine can just dial up a Bitcoin address, an Ethereum address, receive money, and send it and spend it, right? So this whole era of sort of programmable blockchains is what Ethereum ushered in. And the second major thing, which hasn't gotten as big today, but I think is going to be very important, are private chains, privacy coins. So Zcash, Monero, and their various descendants. And so that's, you can fork in the direction of programmability, you can fork in the direction of privacy. And privacy is itself a whole thing because it's very advanced cryptography to turn it from this totally public Bitcoin like blockchain where everybody can see every transaction to one where you have security. And the analogy is, do you remember, when the lock symbol, actually it still appears, the lock symbol in the upper left corner of your browser, right?
Mm.
You know,
Yep.
there used to be a time when there was a green lock symbol for HTTPS content and no lock symbol for HTTP content.
Hmm.
Basically, when the web started, most of the content was insecure, as HTTP, hypertext transmission protocol. But people quickly discovered that you wanted to do things like send credit cards online and so on. And so HTTPS was invented, which was a secure transmission protocol. And so one way of thinking about it is Zcash is to Bitcoin as like HTTPS is to HTTP. Privacy coins are to Bitcoin as HTTPS is to HTTP. Okay. My point being, those were two of the major kind of interesting forks, conceptually of Bitcoin. They weren't literal forks of Bitcoin. They were conceptual forks, like directions you could take, starting around 2015-ish for privacy and
Mm.
programmability, respectively. And, now to your point of can you do blockchain without cryptocurrency? this was sort of a big thing at that time where people, were enthused with the idea of, oh, wow, you can track everything. There's a distributed ledger. Oh, but I'm not so sure about this Bitcoin thing. That seems kind of crazy and weird and volatile. What if we strip that out? And what if instead we have like some consortium of banks and they have a blockchain for their internal stuff? The problem with this whole enterprise blockchain thing is that it's actually a worst of both worlds hybrid. It's like an infertile hybrid, right? Sometimes, you have Hegelian thesis plus, antithesis that's a useful synthesis. And sometimes it's just like an infertile mule or something like that, right? And an example of a synthesis that worked in the space was buy Bitcoin with fiat, right? That gave rise to Coinbase and to Kraken and all these other exchanges. Because even though it seemed like a contradiction, hey, isn't Bitcoin against the banks? Why would you buy Bitcoin with fiat? It seems like a compromise of both things. It was a peanut butter and jelly combo. It worked, right? An example of a combination that did not work was enterprise blockchain because it had the complexity of enterprise and the technical complexity of blockchain without the upside of the cryptocurrency. Okay, so just to drill into this for a bit, if you had some consortiums, 2015, 2016 era consortium between banks on a blockchain that did not have a crypto asset intrinsic to the chain or associated with it, then you just had a boondoggle where you're trying to get 8 companies to cooperate without any incentives for the executives or management to do so, right? And that's why consortiums are really hard. Generally, consortiums only work if there's like one hub, like a Visa or a MasterCard that's like making it work. It's like their business to make it work. A ad hoc consortium, usually there's like one driving actor in that consortium. Yeah. And they have enough muscle or connections to pull the other ones in. It's a CEO level thing where you have to jawbone the other CEO to get 8 companies to work together, especially on their database backend. It's really hard to migrate your database within a company, let alone between, right? So instead, in theory, if you had a cryptocurrency associated with it, well, if these organizations, they're incapable of doing so in my view, but if they did all partner and announce this and say they were doing it, that coin would be marked up to like $2 billion. And suddenly all the executives would, because the speculative value of how valuable this thing would be if it did work, some of that future value is teleported into the present with some discount. Maybe it's worth 200 billion with 10% probability in 5 years. So you value it at, 20 billion today, for example, right? Or 1% probability in 5 years. You value it at 2 billion today. So if they had some mark on the books, every one of these executives tasked with doing this integration at these 8 companies could have said, whoa, look, I just contributed 125 mil or 250 to our balance sheet as a function of doing this. Give me some resources against that illiquid equity to go and build this thing out, and we can build more of it, right? It would have made it tangible. It would have made it, like feasible for them, because you need the cryptocurrency there to align incentives. So that's like one piece of it. There's more I could talk about, but essentially, blockchain without cryptocurrency, I think, is just a dead end. And instead, what you're going to find is that all of the interesting crypto applications are cryptocurrency right? Like, for example, digital art is not just art on the blockchain. It's art on the blockchain with an entire auction market and Ethereum built around it.
Right.
A passport on chain will not just be a passport. It'll probably require you to lock like $1,000 of ETH or something like that to show it's actually you. Like your passport fee is like a deposit that makes it difficult to fake. It's like, you might get lots of, fake passports, but it's, if you're putting effectively a tax of $1,000 or $100 or whatever it is of a stake on each one, it's hard for people to dial up lots of fake ones, right? So cryptocurrency would integrate into passport authentication in that way. It's not the only component of it, but it'd be a part of it. And like decentralized social.
What about a couple of stumbling blocks that have been in the news here, where you have the transaction costs in Ethereum that make it hard to scale, right? So like
yeah. So this is basically, there's a saying, scaling is a good problem to have. Basically, it just means there's out of control demand, and then you just have to solve it fast enough. So what I've seen from blockchain scalability, I am generally bullish on it, because a lot of the smartest people in the world are working on it. It's like the transition from 28K modems, 56K modems to, fiber, and then broadband, wireless, and now 5G and so on. Like very similar to that, the early generation of internet applications or web applications had to be coded around the limitation of constrained bandwidth, right? That's why like early Google was just, you type in a word and it gives you back results. It's a very low bandwidth application. Early Netflix was type in an address and we'll send you, some videos. They weren't streaming.
Send you a filthy DVD. Yeah.
Yeah, filthy DVD. Exactly. That's right. they had to wait. I mean, Netflix was aware that the future was streaming, but it literally took 10 years before home connections caught up to it. And, like much of the modern environment, by the way, like we take it for granted it's been around forever, but really a lot of it is just post iPhone.
Hmm.
It's basically 2009. This whole tech ecosystem is like 12 years old. Like even in 2008, for example, Joel Stein like wrote an article where he's like going through the power centers of the US, I think, for time. And he didn't name Silicon Valley, right? Like basically Silicon Valley technology was not considered a power center until after the iPhone. It's like much more recent than people think. And so, because during the 2000s, as you recall, they cared about Iraq and they cared about, terrorism and stuff. And now that's back in the news with Afghanistan. But tech was just sort of like this sidelight thing. And, from the perspective of somebody like Microsoft, for example, only Google was making money on the internet, even up until the year 2008. And then post 2009 with the iPhone and with, that making Facebook go vertical and with the market that it expanded because everybody was now on the computer all the time, not just nerds at their desktop. All those things made, tech go vertical, but it wasn't until then. And why do I make that point? Well, people they've sort of rewritten history, just like with Instagram. People today think it was an obvious decision. At the time, they mocked it, right? The internet was not like obviously useful and central until all of the SaaS apps completely dominated,
Hmm.
right? And that was really, mid 2010s. Okay. It
Right.
was not like 2009 because before the iPhone, people could go, for the most part without using a computer other than email, you know? And then afterwards it became central. Everything was based on it. Now you need, a phone to share your like vaccine passport or something like that. Now it's like assumed that everybody has a smartphone, but it's basically about 10 years old, that modern environment. And so similarly, like with blockchain, just to make the analogy, just to close the loop on this, I roughly think we're kind of in the year 2000 for blockchain, roughly, or for cryptocurrency, because we have, in the year 2000, you had Yahoo, you had some large hits, some billionaires, and so on. You had the infrastructure layer of the internet. People certainly knew, everybody had heard what it was, but there were a lot of people worldwide who didn't use it. Like more than 95% of India, I think maybe like 97% or something like that, was not online. Much of the world was not online. It was really a US thing. And it was a US thing that was a curiosity, whatever. You could take it or leave it. You could basically live a completely offline life, right? And that's kind of where cryptocurrency is right now, where people can live a completely crypto free life. You know about it, you've heard about it, you've heard of Bitcoin, you probably have friends that hold it, like friends who had an email account in the year 2000, but you could get by with physical mail. And if you wanted to ignore it, you could. By 2010, that really wasn't an option. And then by 2020, it completely
Hmm.
infeasible to ignore the internet. And I think that's roughly the progression of crypto. Maybe, so today I would analogize it to the year 2000, where we have the infrastructure layer, we have miners, we have chains, we have, exchanges, we have the first set of billionaires, but it's like at that infrastructure level. And then the applications are coming online now. And, like loans and derivatives and, NFTs and other kinds of things, and it'll become unignorable, I think, in 10 years. And I think it'll become like impossible to live without in like 20 years.
Mm.
Okay.
What about SEC regulation with respect to investments?
Really good question. So, medium to long term, I do think that the energy is on the side of legalization and decriminalization of all crypto stuff. And the reason for that is it is no longer just about like some random nerds. We're moving from internet influencers to crypto creators. So you and everybody on Substack and everybody on YouTube and all of these people who are very, very influential voices in total from all across the political spectrum can literally make more money and have more property rights as a crypto creator than an internet influencer. And let me just speak to that, and then let me come back up to the
Mm.
SEC point. So the internet influencer is kind of like a sharecropper or like a almost like somebody who lives in a communist dictatorship in the sense that they don't even own like that, right? You can be deplatformed at a moment's notice, and it's about free speech, but it's not just about free speech, it's about digital property rights. Okay. So, like there's this great article actually in NPR of all places from years ago before it became completely woke on the secret contract or the secret document that transformed China. And, most people don't really have a good mental model of China at all, frankly. But, China pre 1978 was an environment where you could be shot for keeping just a little bit of the grain for yourself rather than putting it all into the collective pool to be like, stolen by some bureaucrat, right? Basically, the concept of private property was completely taboo to such an extent that there's this famous story of the, farmers in the, private under Deng Xiaoping and said, okay, you can keep some. This reform allowed China to generate enormous amounts. On Facebook and on Twitter, you're basically not getting anything. Now, Facebook is now starting to roll out tools from, if you have 1 million followers on Twitter, online fun as opposed to millions, right? Just throw the book at everybody, only at like, a few people or whatever, or a few companies. So go after a Merck or a Pfizer or whatever. But when there's millions of people, there's some people who are just Grand Theft Auto in their mindset, The regulatory agency who's senior at one is very much interested in this kind of thing. And so the thing is that having lots of individual civilians who are interested in taking a risk that only affects themselves, to take
Except
a risk
with
on
much of the time.
So because of that, because it makes money for creators, because it's like that one possible sky hook out of this sort of, inflationary zero interest rate, I can't build environment, I think there's going to be too much support for crypto to ban it. And it's got the individual benefits. They're allowed, but the government regulates them. These at least have a chance of success, like a startup has a chance of success and people can buy into them. So because of that, because it makes money for creators, because it's like that one possible sky hook out of this sort of, inflationary zero interest rate, I can't build environment, I think there's going to be too much support for crypto to ban it. And it's got the individual benefit.
But what's
now,
the state of it
point,
now? I mean, if I create a company and want to tokenize part of the equity and sell it to people on Twitter, will the SEC let me do that? And if I successfully do that, I mean, essentially that's like going public without going public. Then I'm cutting out Goldman Sachs and whoever else would otherwise be taking me, any other rent-seeking entity that would be taking me public.
That right, exactly. Now, so the short version is this is going to be a giant struggle, which I think my general model of the world is the present and the near-term future, maybe the next decade, is communist capital versus woke capital versus crypto capital. So communist capital, CCP, you must submit. Woke capital, NYT, you must sympathize. And crypto capital, BTC, you must be sovereign. Okay. And to go through those for a second, the Communist Party is very simple. It's just like submit to the Communist Party. They have total power. And so long as you submit, you're not going to be disappeared or put in a concentration camp, or maybe you are if you're a Uyghur. But let's say there's a path to compliance, and they're just very straightforward. Submit because they are powerful, right? Woke capital, the NYT version, is a little more subtle. It says instead, Sam, submit because you are powerful, because you are white, because you are male, you must apologize. And then it ends with you bowing your head, just like the CCP. It's also an ideology of submission. It's just, it's like a left-handed version. It's a little bit of a curly Q. It's not that subtle anymore, but it's like slightly more subtle than just straight up bow to the state. Yeah. And the third corner is crypto capital, BTC. You must be sovereign. So as contrary to the other two, it says you have to hold your own private keys. You need to, you can't trust anybody. You must be responsible for your own stuff, right? Now, these three kind of poles, right, submission, sympathy, sovereignty, are bad when taken to extremes, but they're also bad if there's a complete absence of them. The complete absence of any submission to state law gets you San Francisco, where people will steal $999 or $900 worth of goods and just walk out of a store because there isn't basically no police enforcement.
Right.
And the absence of sympathy leads to like the total opposite of wokeness, which is like, Jim Crow or something like that. And that's also bad. And then conversely, the absence of like, if everybody must be sovereign at all times, most people frankly just don't have the skills to do it. It's also a recipe for a totally, zero trust society. And it's something where there's no division of labor. Are you going to not just cook your own food and sew your own clothes, but build your own well and have your own power outlet? Well, you need to have some trust, right? So I think what we have to establish is the center, the decentralized center. And how does that relate to your question? I think that the free world may increasingly be the world outside the US and China, plus American states like Wyoming, places like Miami, Austin, or not Austin, let's say Texas, Colorado, right? Basically, the West is becoming increasingly unfree. There's also pockets within that are resisting. And I think that the rest of world, right, that sort of like overlooked area that's not the US and not China, is actually where a lot of crypto stuff is going to be legalized first, right? Like El Salvador in a few days is going to make Bitcoin the national currency, right? And the various financial capitals of the world, like Switzerland, Singapore, Dubai, Monaco, et cetera, those are going to be into crypto as well. That's what's causing prices to rise, is that money is being seized from other people indirectly and directly to prop up these establishment organs that have lots of people and lots of lobbyists. It cannot be simply propping up the old corpse. We have to build a parallel government that is far more capital efficient in parallel. That because the thing is that the old corpse is simply not, it's not even functional, right? It's basically, it's literally setting money on fire to give more money to it. And frankly, it's not capital limited in any way because they just printed trillions of dollars. In no way is the US government limited. In fact, the bid up,
we're going to have to
all
pay.
they just did is print all this. Go ahead.
Presumably, I mean, well, one, we're going to have to pay that somehow. I mean, either we're stealing,
Yeah, it's because it's being
we're going to
seized
pay it
from
as
everybody.
inflation, or we're going to pay it as
Yeah, you're all being
as
diluted
debt.
down. That's right. So the state is causing every single problem here, just going one by one, right? Still values is actually just the dollar, and that's like the last tattered thing, this greenback that is connecting people together. It's an economic union, not really even a political union, because 50% of the country hates the other 50% and vice versa, and roughly. But I think that's true. I don't think the center holds it anymore. And so when, if and when the dollar is inflated away, then even that tattered greenback holding people together no longer is there.
Let's give maybe a 10-minute primer on blockchain and cryptocurrency. I don't know how much knowledge to assume on the part of my audience, but I think it's worth putting the most important concepts in view, and just why migrating away from an environment of trusted third parties is important. So
sure. Okay. So there's a ton, obviously, I can say on blockchain and cryptocurrencies and Bitcoin and so on. But first, if you only understand one thing, just to motivate Bitcoin, you can get there in 4 steps. Okay. So step 1 is when you have physical cash, right? So Sam, I give you a dollar bill. Okay. We take something for granted, which is the physicality of that. I have it, then I no longer have it. You have it, right? The debit of me and the credit of you is obvious. It's manifest in the physical world. The dollar bill can only be in one place.
Right.
If we transplant that naively into the digital realm, okay, if I try to just take the serial numbers on that dollar bill and email them to you, and we try to treat that as cash, because after all, it maps 1-to-1 to each dollar bill, what happens? The issue is that I still have those serial numbers, even as you do. So you can't just spend it with the serial numbers, because I could still spend it. This is a so-called double spend problem. There isn't a native form of scarcity in the digital realm.
Right.
Okay. So what we did until 2009 is we worked around that, where we interposed a third party, a trusted third party, a bank or a PayPal, which is running on top of a bank in the middle, where when I sent you a dollar electronically, there was a central entity that would debit me and credit you in a database, right? A -1 and a +1, right? The fundamental breakthrough, the problem, of course, is if you have that central actor, the guy who has the permissions on the financial system, that bank can also award themselves a lot of money, or they can block your transactions, or they can do lots of things where they're not just a, neutral actor, but they're a motivated actor, and they're taking actions that are adverse to you or to your recipient or both, right? And so it's inelegant from a computer science perspective to have a, let's call it, privileged node in the topology, this sort of permissioned, actor in the center that can, debit you or credit the other person, or choose not to do so, or credit themselves. And so that gets to step 4, which is decentralized digital cash. And the fundamental innovation of Satoshi Nakamoto was coming up with a data structure that could record those debits and credits and be updated in such a way that no one party had control over the updates. And this is technically complicated. It's not like super, super complicated, but it requires introduction of a bunch of concepts that, I won't be able to do right now. But the fundamental idea is that rather than just a predetermined list of banks that can do the debits and credits, anybody with sufficient compute can do the debits and credits.
Yeah,
So
maybe just introduce the concept of the ledger.
Yeah, that's right. So basically, every debit and credit is entered onto a ledger, and you go from the centralized ledger that is essentially hosted at these banks to a decentralized ledger that anybody can, read from and write to on the internet. And one way of thinking about this is blockchains are actually radically egalitarian and radically decentralizing, because every user becomes a root user. Okay. So what I mean by that is, for example, you have the root password to your laptop, right? You have full permissions over it, but you don't have full permissions over the Twitter database. You can't see it. You can't see every row and column in that database, or to the PayPal database, right? But everybody can download the Bitcoin blockchain, which is the database of all transactions. So everybody can read from it. Anybody who has a little bit of BTC can write to it. And anybody who has sufficient computation can write blocks to it, meaning approved transactions, approved debits and credits. So it's like open source, where anybody can download code and run it, but it's not just open source code, it's open state. We've basically managed to go from simply making the source code readable by everybody to making the database readable by everybody and writable by anybody with corruption protections and so on and so forth. Now, that may be, clear, maybe unclear, but the main thing it does is it's now a native way to represent digital scarcity. Recall the double spend problem that we
Mhm.
talked about, right? The thing is now you have a third party, this distributed ledger that's recording the debit and credit, but everybody can see it, or everybody who you designate can see it with so-called viewing keys. So it can be totally public, it can be totally private, just between you and the other party, or it can be something intermediate where you allow your board of directors or a regulator to see it. Okay. And the thing about this is it unlocks the digitization of every scarce good. Just to give you a sense of this, okay, with the internet, before the internet, we had, telephony with AT&T, and we had television with NBC, and we had mail with the US Postal Service, right? And afterwards, these three things were integrated. Things that were regulated and thought of in totally different ways were all reduced to packets. And now you think nothing of sending somebody an email with a link to a Zoom that does both a telephone and a video call at the same time, which combines aspects of mail, television, and telephony, right?
Mm.
Okay.
Yep.
And the reason for that is that all information was able to be represented in the form of a packet that could be sent over a packet switch network like the internet. And that meant that once we understood that fundamental thing, we could represent books in this way, movies, telephone calls, as well as things, all legacy forms of information, but also new forms that weren't around prior to the 1990s, at least at the same scale, like search engines and social networks. Those were internet native, forms of information, right? And one mistake that people made, by the way, with the early internet is they thought of it as another channel. Like they were like, okay, we're going to have our radio strategy, our television strategy, our magazine strategy, and our internet strategy. And do you know why that was wrong?
Who's we in this case?
This is like the media company executives, like Hollywood type executives in the late 90s, early 2000s.